I don't blame him for calling Stretch a Ponzi scheme, but he's wrong, very wrong, because of the increasing credit risk of the US government and how hot inflation is running. STRC is going to look even more attractive. How is it going to perform in a bear market? This $300 trillion global market can port into an asset that is only $1.6 trillion. It's immaculate financial engineering. For SEDA, that's basically the exact same dynamic, but on a higher frequency. So ideally, this drives SEDA to trade at and above par more often so they can purchase more BTC more often.
The one thing that does raise my eyebrows though about it are the DeFi protocols being built on top of STRC.
Anyone watching this, I would be extremely wary of those. If STRC depegged massively, that would probably cause a lot of these protocols that are offering 30, 40, 50, 60% leverage STRC yield to explode. This is going to drive a lot of demand.
One thing that has really helped this market stay afloat over the last couple months has been these new preferred shares from MSTR and from Strive, right? We've got Stretch and SEDA gobbling up lots and lots of Bitcoin, especially Stretch. What is your take on Stretch and how important is it for Bitcoin moving forward?
It's a great question. You know, I got the Saylor follow a couple weeks ago, so I'm very happy about that. Finally, nice. Only multiple years of posting Bitcoin content to get it, but that was cool. You know, Stretch is really interesting because on the one hand, you know, you've got all of these Ponzi scheme callers like CoffeeZilla, who has PTSD from Terra Luna and all of the crypto crashes of yore. So I don't blame him for calling Stretch a Ponzi scheme, but he's wrong. And then on the other hand, you have people who are saying like this is going to eliminate all Bitcoin bear markets because in the dash for cash, people are going to buy STRC. Well, like number one, the Ponzi scheme enjoyers, the ones who are saying that this is a Ponzi scheme, are very wrong, right? Number one, I think Jeff Walton put this really, really well. He sort of likened STRC to insurance. The fact that most of the dividend is covered by new issuance of STRC is just the same as insurance contracts, right? It's not a Ponzi scheme, right? Because insurance companies, they have a massive balance sheet, but they're not selling the assets in the balance sheet in order to pay out claims. They are using the proceeds from new payments from policyholders in order to pay out new claims. In the same way, STRC has a fortress, Strategy is a fortress of a balance sheet, but it's not using that balance sheet in order to pay out STRC dividends. It is using proceeds from new STRC purchases in order to fund, and the ATM program in order to fund the dividend, right? So it's like an insurance company, not a Ponzi scheme. Ponzi schemes don't have any assets at all, right? It's Fugazi, man behind the curtain, Wizard of Oz type stuff, where it's literally smoke and mirrors. There's nothing behind it. And so STRC, I believe, is fundamentally different. And look, like the big story with STRC, obviously it's had record-setting days, you know, days where they're buying several thousand Bitcoin in a single day, which is many, many multiples of the daily issuance. So it's a major component of why Bitcoin has managed to move off the lows in my mind. I think the big story with STRC is the fact that what I've said is that it's transmuting Bitcoin's properties into a fixed income product that attracts capital from a much larger market than the current market for BTC, right? If you think about it, Bitcoin currently trades like a tech stock. You and I both know it's not a tech stock. It has the monetary properties to be the least correlated asset in existence, not correlated to anything. It does well during risk-on environments. It does well during risk-off environments, but it doesn't trade that way. It trades with the software bucket. However, there is a massive pool of capital out there in the ether, anywhere from $200 to $300 trillion worth of capital that is allocated to fixed income, whether it's because they're older retirees, whether it's because they're pension funds, whether it is because they're insurance companies, whether it's because you are just a trading desk that has a mandate to hold fixed income, you are holding fixed income. It's larger than the global equity market. It's much larger than the global commodity market. And effectively what Saylor has done is he's taken this asset with which on a 4-year smooth basis has never had a compound annual growth rate below 29%. And he's saying, hey, look, I can give you about 35% of this in a fixed income product. How does that sound, right? You give me the proceeds to buy this asset. In return, I'll give you 11.5%, which is underwritten by an asset that has consistently done basically 30% a year, no lower than that for its whole life. How does that sound, right? Sounds like a bargain, particularly when you consider that right now, the 30-year US Treasury yield is only offering 5%, right? Granted, it's very high. It's very high to historically where we have been. But even still, it doesn't even come close to what STRC can offer. Stretch is offering junk bond-esque yields, but with an investment-grade balance sheet, right? They have 59 years of dividend coverage, even if Bitcoin didn't move at all, right, on their balance sheet, and they were forced to sell BTC in order to make up the dividend. And so ultimately, like Bitcoin would need, and another crazy stat is that Bitcoin would only need to rise 2% a year in perpetuity in order for Strategy to pay the Stretch dividend without issue, or all dividends on its balance sheet without issue in perpetuity. And so ultimately, they've made it so that fixed income capital, this $300 trillion global market, can port into an asset that is only $1.6 trillion, right? And so as the years go by and inflation becomes more of a hot button issue, and the US government continues to offer higher and higher and higher yields, but it's not as enticing because of the increasing credit risk of the US government and how hot inflation is running, STRC is going to look even more attractive. And so in my mind, it's immaculate financial engineering. It's a great product. It's not for me because I'm 25. I'm in the high growth era of my life. There's no reason for me to park my capital in STRC. Maybe if I had a $10 million exit tomorrow, I would take $1 million or $2 million and throw that into STRC just for kicks. But at this point in time, I'm more concerned about capital growth, not capital preservation. But it's phenomenal for the cohort of the world, much larger than me, that is interested in capital preservation. The other component with STRC, to your original question, I just kind of wanted to set the stage there, is how is it going to perform in a bear market? Is it going to dampen some of the downside during a bear market? We'll have to wait and see. Mechanically, it makes sense. Mechanically, it makes sense that a fixed income product would be what people flee toward during a bear market. That's historically what happens. You flee from equities, you go into bonds. But unfortunately, typically you flow into government bonds during a recession, not corporate bonds. And even though STRC isn't a bond, functionally the way that it trades, I wouldn't imagine it's too different from a corporate bond. I think that's the way that the market is going to trade it during de-risking periods. Will it make it such that the bear market has less of an impact on Bitcoin? I believe so. I think it will dampen that impact. But number one, it remains to be seen. Number two, it's very hard to quantify. Number three, and most importantly, in the event that we get a correlation to one event where something happens, I know it's vague, but something happens, like March 2020, let's say the hantavirus explodes in the United States. All of a sudden, markets sell off by 50%, Bitcoin's down 75%. I don't think STRC will be where people flee. I think they will flee to cash and they'll go to the store and buy bread and toilet paper and guns like they did in 2020. So I think during a bear market, it will have a dampening effect on the magnitude of the drawdown, but we'll have to wait and see. But during a correlation to one event, everything gets sold, including Bitcoin, including gold, including literally everything. All people want is cash. So in that first environment, I think it does well and it dampens the magnitude of the bull market, but time will tell. We'll see what happens.
Yeah, and when it comes to STRC, I completely agree that the calls of it for being a Ponzi are completely unfounded. And one reason for that is because Michael Saylor can print as much common shares as he wants to pay the dividend for STRC, is so that there really is no need to even think about touching the Bitcoin because he can just print the ATM and make sure that there is coverage in that regard. The one thing that does raise my eyebrows, though, about it are the DeFi protocols being built on top of STRC. We are seeing coins with promising an APY of 50 to 60%. And we know that the chase for yield has caused some of the biggest, of course, collapses in this space. So have you looked into these DeFi tokens that are being built on top of Stretch, and what do you think about it?
I haven't, but I don't like the sound of it at all. I know of a couple of DeFi tokens, namely Buck token. I know that wound down. It was actually the way you do a DeFi token on STRC. Number one, it's only enticing for people who live outside of the US and don't have access to actually buying the perpetual preferred stock in a brokerage account. That's it. That's who it's advisable for. But the only way to do it properly is to offer a lower yield than STRC. Right? That's how it should work, because if you're offering any higher, then you are playing games with leverage. And obviously when price is volatile, let's say we had a 10% Bitcoin sell off today, if STRC depegged massively, if STRC depegged all the way down to like $75, for example, then that would probably cause a lot of these protocols that are offering 30, 40, 50, 60% leverage STRC yield to explode. And then all of a sudden your money is no longer. So that wouldn't be ideal. It's almost like, obviously this is different from Terra Luna. STRC is fundamentally different and the comparison is so silly. However, the idea of an algorithmic stablecoin, and all of a sudden, in the event of a massive sell-off, the underlying becoming worthless, that could be what happens to these STRC tokens that are offering crazy yield in the event that a massive Bitcoin sell-off occurs. So anyone watching this, I would be extremely wary of those, right? If you're not happy with 11.5% dividends, right? Return on capital dividends, I would say buy Bitcoin. And if you're not happy with Bitcoin's 30% CAGR over 4 years, I would say like put down the phone and stop becoming a dopamine hound, because if 30% a year isn't enough for you, like you've got some soul searching to do. That's what I would say.
And then the other big news in the preferred space is that just today, Strive announced that SATA comes out with a daily dividend. How does that change the game?
Yeah, that's really cool. I mean, kudos to the whole team over there, Matt, Ben, Jeff, Joe, all of them. Like, that's really cool. You know, I think it's cool. And it makes it so there's more optionality, if anything, right? Like, it was interesting. Stretch sort of was the first mover in bi-monthly dividends a couple of weeks ago when they announced that they'd be doing that. That obviously doubles up the ex-dividend date and makes it so that the likelihood that it trades near par or the time that it trades near par will increase, which is really good because obviously that makes it so Strategy can accumulate more Bitcoin using the Stretch ATM. And so for SATA, that's basically the exact same dynamic that I believe is going to play out, but on a higher frequency. So ideally, this drives SATA to trade at and above par more often, so they can hit the ATM more often and purchase more BTC more often. It's just really amazing that we've got some of the brightest minds in structured finance working for Bitcoin companies, specifically trying to engineer new methods of siphoning different capital markets into BTC. It's amazing to see. And, you know, I think SATA, in that sense, becomes a great option for someone who might be looking to get that kind of income, right? Like if you think about it this way, let's say you are in real estate. You've got a portfolio of rental properties, but you have, you know, it's really difficult for like 3 out of your 10 tenants to pay on time, and it's unreliable, and you've got kids and you've got bills to pay. What if you just sold those 3 rentals specifically? Not your other ones because they're reliable, they're cash flowing, whatever, but sold those 3 rentals specifically with the unreliable tenants in worse areas, and you purchase SATA with it. All of a sudden, you've got daily reliable income. Not only that, but you have a liquid market to sell into. Let's say you try this for a month, you don't like it, the payouts are cool, but you want to sell it. You've got a liquid market to sell into. That is a phenomenal option for folks who are looking for higher frequency income, again, with a conservative yield relative to Bitcoin, but a crazy yield relative to what you can get anywhere else. Even with those rentals, he would be, like in this example, he would be getting probably 3 or 4, maybe even 5 times his cap rate on all of those rentals. You know, if we're talking about like a 2 or 3, maybe 4% cap rate on a very, very good property, SATA's offering what, 13%, 13.5%. So, you know, it's sort of night and day, and it offers a really cool option for those who wanna begin seeing the fruits of that income very early, but also they have the optionality similar with STRC to sell at any point in time because it's a very liquid market. So I think this is going to drive a lot of demand. In doing so, it's going to drive a lot of activity above par, and that's going to drive a lot of incremental demand for BTC.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.